Wagwan traders, it's your boy 11 welcoming you back to the zone trading. Hope you all are doing well. Today we are back with another one, so let's get right straight into it. On today's video, we'll be talking about how to tell if the market is trending or ranging. Personally, for me, there are some few ways I tell if the market is actually trending or it's ranging. And one of those ways I identify a trending or ranging market is you have to pick a time frame. Yes, you have to pick a time frame. You have to know the type of trader that you are and the time frame where you actually trade from. You can't just identify a trend without deciding which time frame you are trading on. The market can actually be trending on the daily chart and ranging on the 15 minutes chart. So in order for to make this beginner friendly for everyone, whether you are a beginner or intermediate or a professional trader, I believe you actually find value in this video one way or the other. So what we're going to do is I'm going to break it down into probably like all the steps that I take while identifying a trade. So I'm going to break it down. Whilst I'm talking about it, we are going to be plotting it into the chart. First of all, let's not okay, let's just do that in the chart. I don't have to start drawing lines for you guys. I want to properly just make you guys understand what I actually see whenever I get into the chart. So like I said, first of all, you have to pick your time frame. So personally for me, I'm a swing trader, and the daily time frame works best for me in identifying a trending market. I do not identify my trending market on the 4-hour time frame or the daily and 1 hour time frame or the 15 minutes time frame. I identify my trending market on the daily time frame. That way I get to have more clarity and clean waves in the market. So first thing I want to do is this is AUD JPY daily chart. As you can see, first thing I want to do when coming into the chart is go to my daily time frame. We're already on the daily time frame now. Now I can clearly see that the market is trending up, but this is not enough for me to identify that, oh yes, this market is actually on an uptrend. The second thing I want to do is I want to zoom out at least 3 times. Always zoom out to get the bigger picture. Ask yourself, where is this price coming from and where is this price likely going? So if you identify the chart on the daily time frame, you come to this zoom out button here, you click it up to like 3 times. 1, 2, 3. So that way I see the bigger picture of where the market is coming from and where it's going to. The next thing I want to do is draw a trend line if need be. Personally, I do not use trend line more all the time. I rely strongly on market structure, support and resistance and all that. But for the purpose of this video, I'm going to just give you step-by-step confluence to take while identifying a trade and how to actually execute the actually execute a trade using these few techniques I'll be listing. So first, we are on the daily time frame. Secondly, we've zoomed out. Then thirdly, we want to identify plot our trend line. So for downtrend, as you can see, this market is heading down from this zone right here, and this was the last point it got to. So if you want to draw your trend line, you draw it from the high and extend it into the future. The purpose of this trend line in this daily chart can actually tell you if we are getting a continuation like so, or a breakout, pullback, and a reversal. So trend line helps in letting you know if we are going to get a continuation or a reversal. So this is for downtrend. Then for the uptrend, you want to draw from immediately after I zoom out. I want to draw from the beginning of the trend, connect it into the most reasonable zones, and extend it into a future. So with trend line alone, you can clearly see that this is a downtrend and this is an uptrend. But this is not enough to identify a trend to me. The next thing I want to do is identify market structure. Is the market creating higher highs or higher low, or the market is creating lower low or higher high for downtrend? If it is creating, if the market is creating lower lows like so, lower low, lower high, low high, low high, low, then the market is in a downtrend. But if it is creating higher high, low, high, low, high, low, high, low, we are on an uptrend. But if the market is in a box, something like this, you see there's no clean structure either to the upside or to the downside. It's just creating high, coming back, no specific direction. Then we are on a ranging market. So we've been able to identify the time frame, draw out our trend line, know if the market is know the market structure of this particular chart, which is higher highs and higher low, or lower low or lower high. Then next thing we want to do is draw out our support and resistance. Support and resistance. If the market is creating higher highs and higher lows on this situation, then you want to start drawing out your resistance. You draw out all the most important resistance in the market. Then if it is creating lower lows and lower high like so, you want to start drawing your support first. So the reason for this is, if the market is breaking on a downtrend, if it is breaking support, that means it's more likely to give you a pullback, break the support, pullback, just keep going down. Then if the market is on a bullish move, creating higher highs and higher low, then you plot out your resistance. The market should be breaking above your resistance, respecting support, breaking above resistance, and so on. Let me leave this support here. We are going to come back into it. So the next thing we want to also look out for is your confirmation. Do not assume. Always wait for either trend line break and retest, break of market structure, strong rejection on key levels. There are some common few mistakes that I see a lot of traders making while identifying trend or ranging market. They trade against the trend. One, they use only one candle to decide the direction. They draw out trend line to fit the chart. You don't draw trend line to fit your chart. You draw trend line with what you are seeing on the chart. You ignore higher time frame direction. You have to pick your time frame. Okay, let me give a summary of what I just explained. Let me take out all of this chart. We are going to come back and do, like an analysis on how I will take this exact trade. Okay, so like I said, let me give a proper summary first before we get into that. First, you have to pick your time frame, zoom out, draw your trend line, identify market structure, Then mark out support and resistance before your confirmation to actually take a trade. So let's do that in this. So let's just look at the bullish scenario on this market. Now, let's say for example, now we are just coming into the chart. What I want to do now to be able to identify the structure, the direction of this market is, I go on the daily time frame. This is the daily time frame. Next thing I want to do, I want to zoom out. 1, 2, 3. After zooming out, I'm seeing the bigger picture that the market is actually going up. So what I want to do next is bring out my trend line, plot it. So I already know that we have a first touch here, second touch here. So this tells me that, oh, with the chart on the low, I do not use any indicator. You can see there's no indicator in my on my chart. I only use pure price action and market structure to trade. So we've been able to identify our time frame, which is the daily time frame. We've zoomed out to know the clear direction and draw out our trend line. Then when actually you want to trade, you have to start plotting out your support and resistance, and know your market structure. If the market's creating, on this market, you can clearly see that the market is creating higher highs, higher lows. Let me draw it out. Higher high, higher low, higher high, higher low, high low, high low, higher high, higher low. So this has already told us that the market is creating, market structure wise, it is creating higher highs and higher low. So what is the next thing I want to do is marking out our support and resistance zone. So for our resistance zone, I'll be using the line chart. You do not use a line to draw your support and resistance zone, no. But for the purpose of this video, I just want to use the line to draw my resistance zone, then I'll use the box to draw my support zone. So this is a resistance zone that the market broke out from. This is another resistance zone. Let me use this one. I don't want to have a lot of resistance zone on my chart, so let's just use the most one with momentum. This is another resistance zone. Resistance zone. I'm not going to, start plotting the most important resistance zone to use, because the purpose of this video is just to illustrate how I identify the direction of the market. So since we've identified that the market has been creating highs, high, 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 and it's breaking the highs, as long as it's breaking the highs, which means the direction of the market is bullish. Then for the support level, this was the support that caused the breakout. First one. We have another support level here. Have a support level here. So as you can see, the market is creating support level around all of these zones. Support, 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 and they are all protected, which means the market is not coming back to break support. You see, when it tried here, it just took out liquidity around here. Then it kept on pushing up, down, up, down, up, down, breaking the highs, not breaking the support. This is another way to identify, oh yes, you can clearly beat your hands in your chest and say, yes, this is a bullish move. Now, how do I actually use this as a confluence to actually take a trade? Let me just use this one as an example to get confirmation. First of all, the market is creating. This was the last resistance level. We broke above it, have a change of character. Then this is the break of structure zone. You see, after the market broke out from this zone, it created a huge bullish momentum around here, came back for a retest. Let me draw my trend line. Another thing you should know is trend line alone is not enough to identify the trend direction of the market. Let me give you an example here using the downtrend quickly. Let's do this quickly. Let's say, for example, now this is the high, and this was where the market was currently trading at when before we got this push to the downside. If you should put your trend line here and extend it into the future, this is the first touch, this is the second touch, third touch, fourth touch, and here we are getting a breakout. You can just assume, anyone can assume that since we are getting a breakout of this zone here, the market is done with this bearish move. We want to start going bullish. You will be very wrong. Just like it did here. You see, after we got this breakout, it just kept on heading to the upside. That's why I say trend line alone is not enough to actually confirm that this downtrend is coming to an end. So you need to mark out your support and resistance level. If you check after this break of this trend line now, the last high that caused this, all of this low, was somewhere around here. We have a resistance level here. You see how the market was now rejected one, twice, then third time. Assuming the market had broken above this resistance level, now we have two confirmations: trend line break, resistance level break, and close above. We can clearly see the market is changing direction from downtrend to uptrend, just like this. This was the last high. This was the last high that caused, let me identify the low here, the support level. Good. So this market traded from this resistance level down to this level. Now, when the market was trading from this level to this level, this was now our protected high, which is the resistance level. Now the market is breaking above trend line. Let's adjust this trend line because that one is no longer important to us. Mind you, if you want to know how I personally draw my support and resistance level, trend line level, I already made a video on how to properly draw trend line, how to identify market structure, how to plot out your support and resistance video. Just click on go on our page, the zone trading. You see a video. I've made a lot of videos on educational videos on market movements, trend line, market structure, support and resistance level. So this is just me talking about how I implement all of them to identify the trend direction of the market. So first of all, we have a trend line break above around here. This is not the confirmation I need to identify that this market is going from bearish to bullish. I want to see that the market is taking out the resistance level right around here. So the market tapped into the resistance level here. You see it dropped down. Then we tested this trend line back. Now we have a trend line break, trend line retest, then it started going up. This is the confirmation I need to know that the market is, the bearish movement of this market has come to an end. You see, resistance level, break above, break and close above, trend line, break, retest. Now we are starting a new trend, up, down, up, down. So you see, adding trend line confirmation and support and resistance market structure confirmation has been able to give me the clear confirmation that yes, this market has actually come, the trending market trending behavior of this market has actually come to an end. So let's get back into what I was actually explaining here. You see, we got a break here, retest, break, retest, break, retest. Now trend line bounce, resistance, break and retest, break, retest. This is a pullback. Immediately after we get this pullback around here, you see how the market rejected from this zone and then it just kept going up. It never stopped. It just kept on going up, down, up, down, up, down, up, down. So with the current behavior of the market right now, if we are to work with the current behavior of the market right now, what I want to see is, draw my trend line. This will be my valid support level right here. This is the highest point of the market. I identify here as my resistance level. So if this market wants to continue bullish, then we have to see the market doing this. You see, when it comes here, it can either get into here, reject this trend line or this support level, continue upward. But if it wants to go bearish, if the market wants to go bearish, then you see we have, it will break below this level, retesting this level, then continue downward. That way we have a trend line break, support level around here, break of the support level, retest of the support level, using it as a resistance, then it just keep melting down. So it's not that difficult. If you are a 4-hour time frame, all you want to do also is going on the 4-hour time frame. If this is a 4-hour time frame, reset your chart, zoom out up to like 3 times to get a clear picture. So if we go back in time now, you can see that this market is on an uptrend. All you want to do is draw your trend line to give you a proper confirmation that yes, this is a trending market. Draw out your support and start drawing your support and resistance zone. See if it fits. Resistance. As long as the market is breaking all the highs, then we are on a bullish move. But on a bearish move, all you need to see is the market should be breaking lows. The market should be creating lower low and lower high. And just like so. 4-hour chart, trend line, support and resistance, so it's not that difficult. If the market is stuck in a box, creating high low, not giving you a clear direction, then you want to stay away from a market like this. And another key point you should know, that if the market is breaking lows, creating lower lows and lower high, do not start, oh, the market has broken out from this support level right here, let me quickly catch this back into here. No, don't do that. The market can just get to this level and then just stop you out. We are in this business to make money. You should treat trading like a business rather than gambling. So that is what separates the gambler from a trader. Sticking to one directional bias and executing into that direction. If we are breaking lows, I only want to look for sales. If the market is breaking out of this low, I do not do anything. All I want to just do is I can actually set an alert around here. When the market comes back into this level, this is where I will now be looking to take sell back into the support level. Same thing with the bullish move. If the market breaks out from this level, the most important thing to do is this in the forex market, crypto market, whatever market you are trading, stock, futures, is patience. Once we get a breakout of our resistance level, you can see we got this breakout around Thursday, and we got the retest on Tuesday. That's like three trading days before I actually execute on this market. So whilst the market is here, I'm patiently waiting for the market to come back into my resistance level, using it as a support to continue bullish. So on an uptrend, you only want to be buying. On a downtrend, you only want to be selling. Do not buy on a downtrend or sell on an uptrend. No, that is how you blow your account quickly. So for me, I do not use the 4-hour time frame to identify direction. My directional bias on how I know if the market is trending is the daily time frame. I get more clarity to trade on the daily time frame than any other time frame. Some people will say, "Oh, do you have to wait for this?" Yes, I trade a couple of pairs. So if I'm not getting everything I'm looking for on AUD/JPY, that is also what I'm looking for on GBP/JPY. That's what I'm looking for on GBP/USD. So if for the month AUD/JPY is just stuck around this range, I am not trading AUD/JPY. I will focus. I will keep on searching for other markets until I see a clear move like this. Once I see a clean move like this, I'll be interested in that market. If we are ranging, I'm leaving out that market. And that is it, guys, for today's lesson. And I hope you all learned something from this video on how to identify trending markets. Remember, the key is not just spotting the trend, but understanding the signs that tells you that the market is actually moving with strength and direction. Take some time to go back to your charts and practice what you've covered here today. If you found value in this video, do not forget to like, comment, and share, and also subscribe to the channel. Also, let me know in the comment section what trading topic you would like me to cover next. Thanks for watching, and always trade smart, manage your risk, stay disciplined, and I'll see you on the next one. Peace. 11 right here.